Hi everyone, welcome back. And today we have a very interesting topic to discuss. We've had very many queries from people, and people are asking, what is happening globally? Is it affecting you? Is it affecting the invested funds? What are the risk mitigation measures? What's happening with tariffs being shot right, left, center, especially from US, China, and some retaliatory from Europe and other countries? So, Rina, how much would you want?
I think the question is really, at the end of the day, there's all this going on. I don't even understand what are tariffs. How do they work? And then I don't know, IMF is saying what it is saying. Have they decided whether are they going to give us money? What's going on? You know, there's all these things that are going on. True. And so in relation to the fund, what should I be doing? Or in relation to my investments as an individual, what should I be thinking? Are interest rates going to continue to go down? What's going to happen with inflation? Are we going to be affected as a country? I know we don't import much from the US, but just first of all, maybe we can just start generally overview of what should we expect as a country, as Kenya, or as a region, and then second level is how does that affect the fund and what are we doing as a result of that?
Generally, what we expect is quite volatile markets going ahead. And this was seen, I'll say, some years ago when Trump was still the president of US, whereby there were still some trade wars between China and them. And even before Trump came, there was a lot of setup of companies within Mexico and Canada so that they can, let me say, circumvent the tariffs and the issues about trade with China directly trading with US. Mm-hmm. These ones have brought more issues within US and actually Mexico and Canada. They're having to discuss on how to work or work around, because before there was a very good trade area between Canada and Mexico, but now the Chinese have set up various manufacturing plants in those countries. So give or take, whatever is being exported from Mexico indirectly is coming from China. Whatever is some of the things that are being exported from Canada to US, and US being a very high consumerism country, is coming indirectly from China. And Trump is coming here and saying, no, we won't allow this. And they're trying to change the way things are going. One of the things is he's trying to boost industrialization in US. Everyone has their different opinion. Some will say that already the US, the labor force, and actually the way they view manufacturing and actually the jobs may not go well with the population that is there. And others are of the opinion that maybe it can rise up industrialization again in US, whereby they can manufacture their own goods. It's give or take. We are not here actually to break down which is the best thing for US. Mm-hmm. But one thing is, how does this affect us? Exactly. That is the major question. And looking at it from our end as first a country, if the US dollar gains against other currencies, indirectly being from an emerging countries, we are also affected. Mm-hmm. That means our Kenya shilling value drops. As far as it drops, that means anything you are importing from cars, clothes, and maybe industrial goods or even raw materials, it goes up. So affects inflation, and obviously inflation will go up if at all that happens. If everything that's happening globally makes the US actually, the US dollar lose, it's good for us, because whatever we import will be a bit cheaper. But also for the exporters, like the exporters who do flowers, will also be affected, because a cheaper dollar means less in their pockets. So it depends on where you sit at that very moment to say it's good or bad. But I know the question that you want to ask. How does it affect us as a fund?
Yes.
From a fund level, I would like to say it's a volatile market. What we did in 2024, or there's a book that is called What Brought You Here Will Not Take You Where You Want to Go. And actually that's where we are at this moment. We are moving from more stable markets to more volatile markets. And in the trading jargon, allow me to say this, we are moving from long trades, whereby this is your view and you are holding for long, to shorter term, because things are changing much faster.
So fast. Like overnight, you wake up in the morning, things have changed.
Exactly. One view will say there is chaos, gold should go up. Yeah. But all of a sudden, you can find gold losing as much as $200 within 2-3 days. The last 3 days, we've seen gold move from $29.80 to around $32.30 within 3 days only. So these are very volatile markets. What can you do with it? One, there are assets that you can only trade one direction. And for assets that, or let me call it asset classes, if you are buying a stock, you buy a stock or you sell it and you don't have it. So if it's going up, the best thing is you can buy it and hold it. But if it's falling, it's just getting rid of it. But there are asset classes that help us do the opposite, where we call it short selling. You can use derivatives in terms of being able to ride the wave as a stock loses its value. And those are the aspects that we have to maybe look into more as we get into this space. One of the things is the first quarter, I'll say, we were not affected largely by all this. Because if you look at our fact sheet and actually our asset allocation, in international equities, we only had 1% of our AUM, which was negligible based on the whole assets under management. However, we had a bit of sovereign bonds, which is about 6% of our AUM, and that one was affected at the tail end of March, especially with the yields going up with all these trade wars. What do we see going forward? One is more diversification, more protection of our downside using derivatives as we go ahead. However, with more active trading, we always say that with volatile markets, it's a chance to either make or break. So it's more trading, but with more stringent risk mitigation measures. And that way, we believe we can still attain the 20% going ahead.
Awesome.
Yes.
Thank you so much.
Yeah.
Do you want to close for us?
Thank you everyone for listening and following us. Continue following us, subscribe to our channels, and please, if you have any query, write on WhatsApp or call our direct line that is on your screen, and someone will be ready to help you. Thank you. Bye.